Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 29th. I'm Eric Wilkinson, and you may very well recognize me as the Wolfman from mainstream media. What I'm here to do is teach you guys not only how to build an option strategy, but how to implement those option strategies into your portfolios. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right. With that out of the way, let's get it on with some economic data. You know, this is going to be a pretty busy week of economic data. Today we have some good economic data. Tomorrow we have the FOMC, whether or not they're going to raise or lower interest rates. It looks like they're actually going to lower interest rates by 25 basis points. That's kind of baked into the cake. Market really kind of wanted a 50 basis point cut, but I don't think they're going to really get that at this meeting. And I think that we're going to see them say they're going to hold off for the remainder of 2019 if they do cut there. We also then get ISM, which is our main economic driver for forward-looking economic data. That is the ISM ISM manufacturing, which is going to give us the health of the overall economy. So we're going to have to look forward to that on Friday as well. But today we do have some decent economic data coming in as pending home sales. Now this is a forward-looking. You know, last week we had existing home sales. That is what has happened. Now we are looking at pending home sales. This is where people have signed the contracts to buy a home, and that ramped up to 1.5%, expected to be 0.9%. So a nice beat there. They did revise last month's number down slightly by 0.2%, but not enough to really make up for that headline number. Also, consumer confidence coming in at 125.9, expected to be 128.2. Now that is was supposed to be, that's a little bit lower than what was expected, but it is actually a pretty good number. Last month's number was revised from 125.1 up to 126.3. So consumer is still confident. People were looking at that consumer confidence as a kind of a beat because last month's number was 125.1. We came in 125.9, but with the revision of last month's number, it makes it look a little bit less appealing, I guess. Anyway, that's pretty much it. There's also, we've got the Brexit vote going on. All of that is pretty much a nightmare. They want to get a special election going on and all kinds of things. So that we are going to have to keep an eye on. Then let's talk about the overall markets. We've got crude oil making a clawback. This morning it was looking pretty bearish, as you can see here, with the overnight market really selling off and into the day down into the 24 handle. Now we're back above into the 25 handle, 25, 55, and 54 respectively. But now back into the $55 a barrel area, and it is right at the point of control. Now know that that is going to act as a magnet, and the market is going to be very comfortable at those levels. We've talked about this as the market kind of peels back and forth. We're going to be seeing it fill in this little low volume node going forward. I don't expect any different there. So the economy's not really crushing it, so I don't think that there's a major demand for crude oil and or the distillates that come out of that process. It's not just gasoline, it goes into the manufacturing process as well. All right, we've got gold coming off a little bit today, but I think that we're going to see some market upward pressure in this precious gold as we get closer to the FOMC. You know, a weaker outlook for the economy would drive gold prices a little bit higher as there is a flight to safety in that precious metal. So I've been expecting it to stay above 1,500. We did pierce below that a couple of times, as you can see here, but I think that the market is going to try and drive that a little bit higher going forward this week. All right, bonds coming back a little bit after yesterday's big sell-off. I was expecting more of a 160 handle going into this FOMC meeting. We did get the yield curve reversion back to the normal, which is not recessionary, so that that's a good thing. I've been talking about, I don't think our U.S. economy is looking to go into a recession, and now those probabilities of a recession in 2020 have diminished quite dramatically. That being said, I don't see very good things coming out of the European region for coming out of their recession anytime soon. So market pricing in the Fed lowering interest rates. Usually that's a bit of an odd thing because we should be mandating our interest rates based on our economy, but this is a global concerted effort that we've been seeing here. So I think that they are going to lower interest rates. All right. We got the VIX still in 13 handle, but that's with a mixed bag in the equities. We've got the Dow Jones off by about 17 points. We could almost call that unchanged. NASDAQ has been the one that has been the dragger on the equities. It's down 30 points on the day. Not quite an engulfing. It's still an inside day for the most part with NASDAQ. So I wouldn't say that that's an engulfing pattern with the market down today. I think that we're going to hold off here. It is really more jockeying back and forth ahead of this meeting. I think that we're going to see volume start to really slow down throughout the rest of the day. And, that could really drive these markets in either direction. This is what I was talking about with E-mini S&Ps. They're positive on the day, making a new high. That is intraday, so that isn't the overnight session. It's still a solid number. Anytime you get those prints during the day session, that is something chartists and traders will really look at. If it happens overnight, it kind of gets discounted a little bit, and the day session will want to go and try and print those highs. We got that print today. Overnight inventory was relatively short and got that spike off of the morning open, and now seeing a little bit of drag on that as I think the weaker hands are starting to cover. All right, well, without further ado, let's talk about some earnings that are coming out. We've got EA Sports coming out this afternoon. I like EA Sports. I think that the esports or e-gaming has really been taking off. These kids are having all kinds of tournaments, and those tournaments are watched more widely than what we're seeing with real sports, that we know of as older generation, with the football, the NFL, MLB and stuff like that. These kids are really watching these e-gaming athletes. So that is really taking off. And we're even seeing all kinds of monies from those major league sporting venues putting money into these EA sports and e-gamers and tournaments and stuff like that. So I think that EA Sports is going to be doing rather well and probably will get an upside boost there. And then I'm also going to be looking at AMGN. One thing that I'm not loving about AMGN is this massive rally we've got going on today. And I was going to play this to the upside, but I don't like it when it gets priced in that much ahead of earnings. So one of the things is if it comes out in line with expectations, we could really see a sell-off. Another reason is that it's got overextended to the upside a little bit here. As you can see, it's outside the value area, which is giving me a little bit of pause as well. But that's going to be a game time decision, how the market reacts towards the end of the day before I do anything there. And then the rest of the week, we've got some pretty good earnings coming out as well. Apple comes out tomorrow after the close, and a couple of other ones. We got also Hess Energy and Yum Brands that I'm going to be looking at for earnings plays this afternoon. So follow me on Twitter at Wolfman's blog. Usually tweet those out. Didn't play anything yesterday. I was looking at Google, but again, Google, like AMGN, was making a massive rally, all-time highs yesterday, which I don't like to get involved in when they make those big moves. Even if it comes out decent, you could see a sell-off. I think that Google didn't do as well as they were expecting, so we did get that sell-off. But having said that, AMGN kind of feeling like a similar setup like Google, and I don't want to get smacked on a surprise there with that one. All right, and that's about it. I'm going to be doing a webinar this week, so check it out. We are kind of wrapping it up on our bias. We come up with this directional bias, put a strategy on that bias, and we try and create the best probabilities by taking into account all of my rules that I have in and around these option strategies. It's not just about how you build it, it's about how you implement it, all right? So that's what we are focusing on in these webinars. And that's all I've got for you, other than if you can't take that, take it easy.